Whether you're into cars or not into cars, if you drive a car, this could and probably will affect you. She is Divya Sangam, and you were with LendingTree.
Yes, I'm with Value Penguin, which is LendingTree's insurance research arm.
Oh, perfect. And this is regarding car insurance rates set to rise by 8.4% in 2023. So I saw this
Yes.
come across. I appreciate you reaching out. I figured this would be an excellent opportunity for me to kind of educate myself and some of the listening audience as to what this really means, because whether you're into cars or not into cars, if you drive a car, this could and probably will affect you.
Yes, it will.
So with that being said, the first bullet point, auto insurance premiums are expected to increase by 8.4% in 2023 based on filings submitted by insurance in late 2022. This is highest increase since 2017. What kind of goes into those numbers? Seems like a kind of a larger increase.
Yeah. So the reason why this 8.4% increase is going to come as a shock for many Americans is rate increases for insurance have been fairly low since 2018. In fact, after the pandemic in 2020, a lot of Americans saw their premiums decrease by about 1 to 2% on average. So after experiencing pandemic discounts and seeing your premiums go down, to see it go up so quickly in 2023 is going to come as a shock. And of course, this is due to the rising cost of claims and the rising volume of claims. So many of us are back on the roads again. We're headed to the office. We're sending our kids to school. So higher volume of claims, more expensive claims, that leads to paying more for auto insurance, unfortunately.
Do you think it's more of an anticipated move? Because the way you broke it down makes complete sense. So we're actually, and if I'm understanding that correctly, we're actually on pace to be where we're about to increase to. We just haven't been doing that lately. So it's almost like catching back up to where we would have normally been, plus maybe 1%.
Yeah, I mean, the way this works is insurance companies will set their rates for the year ahead based off of claims and factors that they experienced in the previous year. So what they set in 2023 is based off of what they experienced in 2022.
Understood. Makes perfect sense. One thing I'm learning here from the second bullet point is I live in a state with an incredibly high percentage. I'm in Arizona, 15.6%.
Oh gosh. Yeah, I'm sorry to hear that. That's an average rate increase. So this is just based off of what, some of the largest insurance companies in Arizona are planning to do with when it comes to insurance rates.
Right.
Your premium may or may not go up this much. It may go up more depending on your driving record, or it may not go up as much if you called up and asked for a discount, or you have a telematics device in your car. So these are benchmark numbers which we created using a sample driver. The sample driver is someone who drives a Honda sedan, has a clean driving record, and a good credit score. So your actual rates will vary depending on your individual driving needs and requirements.
But everything across the board is going to increase. It just depends on how much, or it may not increase at all, or it may increase more for some than others. Is that what I'm hearing?
Yeah. So what we're saying is insurance companies are going to increase rates, but my advice to anyone who is going to be grappling with the rate increase is you don't have to take it just because your auto insurance renewal document comes in the mail and you see it's more expensive. You don't have to sign that document and say, I'm going to stay with this insurance company.
Right.
You can call around, look for alternative quotes, or you could call up your insurance company and ask them if they can give you a discount because you've had a really good driving year. You have had no tickets for several years, or you're bundling your policy with a home insurance policy or renter's insurance policy. So the real takeaway from this is you wouldn't know if you can get a discount unless you call them and ask for it.
No, that's excellent. And someone like me who we take advantage of the fact that we take advantage of like multi-line discount, things like that. So a couple different cars, maybe you own a home. And so, it's different than someone who maybe only has one vehicle. Looking at the average
Exactly.
cost of full coverage, what's factored into that 1780? Are we, is it still factoring into that small Honda sedan, or is
Yeah.
it kind of saying the Honda against the Tesla?
No, this is based off of our sample driver who is driving the Honda sedan and has a good clean driving record and good credit history. We used a single sample driver
Okay.
for our average rates because we wanted to create a true apples to apples comparison that allowed us to see exactly how much insurance companies are raising rates independent of other factors that might drive up your rates.
That's fantastic because that's the question. It's like, okay, what are we measuring here? But the one vehicle creates the benchmark.
Yeah.
And the benchmark is, okay, based on this one vehicle. Okay, I understood. Drivers with traffic violations could see 52%. That's crazy.
I mean, it's not
Could.
if you consider, when you have a traffic violation, you're automatically considered a risky driver.
Right.
So the insurance company is trying to raise premiums to mitigate that risk. The takeaway is drive safe, obviously. But even if you did get a ticket, there are insurance companies that offer accident forgiveness or first time ticket forgiveness. So you should be calling around and asking about those policies and advocating for yourself. If you think the ticket is unfair, it's fine to fight it in court if you think you have a chance of winning. You know, there's definitely ways for us to advocate for ourselves as drivers and consumers to not have to pay more for everything. Ask questions until you're satisfied with the answer. There's no such thing as a stupid question, especially when it comes to insurance.
It's your money. It's your future.
It's your money,
Right.
exactly. It's your money and your future.
Here's another one here, and I don't know if you can give. I mean, I'm pretty sure you could, but the EV hidden cost. Do you know if that's associated with these? And I don't want to necessarily call out Tesla, but when Tesla has a victory or when they have a failure, it's all over the news. The premiums are 28% higher than gasoline powered cars. Do you think that it's because these Teslas might crash into each other on
I
autopilot?
mean, we looked at more than just Tesla. I know that Tesla is considered, the car everyone wants to talk about,
Sure.
and it's a popular EV, but there are other EVs out there. I mean,
Right.
we looked at the Polestar, we looked at a Hyundai, we looked at Rivian, we looked at the Ford Mustang and Ford F-150 Lightning. We even included like Mini Cooper and Nissan. So there are definitely a lot of electric vehicles available that are not just Teslas.
Yeah.
But the takeaway that we got after talking to, car repair shops and insurance companies is EVs are just generally more expensive to repair when they get into an accident because those things are basically computers on wheels.
Right.
They have so many sensors built into them. Even a slight ding on a door could damage something, and that just becomes like $1,000 repair. So when it's more expensive to repair, it's going to be more expensive to insure.
Right. So it's kind of taking the traditional calculation they've always used, kind of
Yeah,
what we've seen and what we project moving forward. There was a story
exactly.
on MSN recently about a Tesla that crashed into a house, but when you look at the photo, it's actually a Polestar, which is kind of funny.
I mean, like I said, everyone likes to talk about Teslas and
Yeah.
they're the most identifiable electric vehicle, but there are definitely a lot of other electric vehicles out there.
We'll get you out of here on this. The most expensive car to insure. I think this is kind of a fun part. The Porsche Taycan, 3,500 on average. And the Tesla Model Y, 3,100 on average. And so we have the
Yeah,
CRV would be the cheapest car to insure.
yeah,
All other variables, equal in 2023.
yeah.
That's pretty interesting.
Yeah, I mean, the Porsche Taycan was not surprising to us because that is a sports car, but the Tesla Model Y was a little surprising until we think about, how much technology there is in
Hmm.
Teslas, and also the self-driving feature is an added element of risk for insurance companies. So that's also something that they may be factoring into their calculations. Um, Either way, I just thought that this finding about electric cars being more expensive to insure was really interesting, given how people have been buying electric cars as a way to save money.
Hmm.
They think, oh, I'm going to save on gas, but there are hidden costs with electric car ownership, and this is one of them. You pay more for insurance. And a lot of times it's not something you're going to hear when you're talking to the car salesman. You discover
Of
it
course not.
after you've bought the car and
Right.
you've driven it home and you can't sell it. So it just it's just I think it's a conversation people need to be having. I don't say electric cars are bad. I think they're great, but you need to go into making that decision with your eyes wide open.
Yeah, and I have to wonder though, and I don't know if they could, if this is something that could actually legally be factored in. But when you look at the the typical customer of the Porsche versus the Tesla Model Y, I think with the Tesla Model Y, you're going to go a whole lot more, air quotes, family oriented drivers, soccer moms, soccer dads, and the Porsche person that just came from the Tesla. They just want to. I mean, they're all fast as all get out, but they just want to zip around as fast as they can, which increases kind of the risk too.
I mean, I wouldn't
It's
I
basically
wouldn't
a
be able
sports
to
car,
speak to that.
right?
I mean, yes, there are assumptions associated with sports cars and sports car drivers being more high risk. But that's not something that there is sufficient information on with electric cars, just because the number of owners, the pool of owners is too small for us to draw any conclusions. But I would imagine, yes. I mean, this is my
Sure.
personal opinion. Yes, when you drive a sports car, you're definitely considered riskier. And so that's going to factor into your premiums.
Yeah, last year on the show we did like the top 10 insurance myths, and the sports car, the red car, all that stuff was listed. It just 100% goes off of price of vehicle, past issues with claims, and future projections. So
Yeah, 100%. I mean, the basic math behind insurance, auto insurance in particular, is um, volume of claims. That is how many claims have been made in your area and how expensive each claim was. So if you happen to be in an area where there was a lot of vandalism or a lot of theft or a lot of people got into crashes, and this is 2022, there were supply chain shortages, labor shortages, it was just more expensive to repair cars. That would be one of the factors behind why insurance premiums in your area are that high.
sounds good. Thanks, Divya, for joining Hard Parking. Don't be a stranger. I'll be looking for future emails on anything that you have that you want to share with the listening audience.
Of course, we definitely will be happy to share all of our research on auto insurance and future reports. I'll keep you in mind.
Thank you. Hey, everyone, if you found that segment beneficial, please hit subscribe below in the bell notification and check out the rest of the podcast at hardparkingpod.com, or it's also available anywhere you typically get your podcasts. That is Hard Parking with Jhae Pfenning. Full episode comes out every Monday morning.